I think we'll go ahead and get started. Good morning. My name is Heather Long, and I'm the Director of Family Support Services here at the ARC of San Antonio. And I want to welcome you to our webinar on the 10 basic financial steps for special needs caregivers, brought to you today by the Mays Family Foundation. So just a couple of housekeeping. We'll attempt to mute everybody's microphone. So if your microphone is on, if you could mute yourself. And also turn off your video just to help with our recording of the session. During the presentation, if you have any questions, go ahead and put those questions in the chat box. And then at the end of the presentation, we'll go over those questions with you. And like I said, we're recording the session, so you can go back and watch it or share it with other families. We just ask that you please be aware to not disclose any personal or private information because of that fact. We want to adhere to the HIPAA standards. Now, following the presentation, we will send you a link to the webinar, and also Jeff's PowerPoint presentation. We'll provide that to you as well. So without further ado, it's my pleasure to introduce Jeff McCracken, and we've known each other for a while, Jeff and I. Jeff works with Mass Mutual of South Texas, and he specializes in financial planning with special needs families. And he's been in the practice for over 26 years. He did spend 10 years, though, in the public school system as a science teacher and a coach. And he hosts many workshops relating to planning for the future. So I'll go ahead and turn it over to Jeff, and then, like I said, if you have any questions, please go ahead and put that in the chat. I'll monitor those, and then come back at the end, and we'll address some of the questions with Jeff. All right,
Hi, Jeff, you're muted. If you could unmute yourself.
All right, am I good?
Yes.
Heather, Sarah, can you guys hear me?
We can hear you, and the sound is it sounds a little reverberatory, but we'll deal with that.
Well, good morning. I am honored to be a part of the team, as it were, of the ARC of San Antonio. Amazing people, outstanding organization, and whose hearts are absolutely for the community of special needs families here and around Barrett County. Thank you, Heather, for the opportunity to speak to your families. As a former educator, I always get a charge out of the opportunity to teach. And if today brings some value to you, then I have accomplished what I hope would happen for you as a family dealing with the ongoing issues and opportunities to take care of your loved ones. As Heather indicated, I've been in the financial services industry for about 26 years. In fact, this past June was my 26th anniversary, and prior to that, I was a high school science teacher and tennis coach for 10 years here in San Antonio and in West Texas. So I'm a Texas-born and bred guy, and today the seminar today is one that I've given about 16, 17 times over the last 18 months. I am a chartered special needs consultant, and I have talked with dozens and dozens and dozens of families to help them address some of the financial planning issues that, quite frankly, are unique in the special needs community. So you'll notice that the title, 10 Basic Financial Steps for Special Needs Caregivers. Let me make sure that you truly appreciate the fact that this is a basic level presentation. In fact, I would submit that probably 5 or 6 of the 10 items that we'll talk specifically about will just be rehashed. In fact, I suspect that probably not much of what I say today will be something that you've never heard, and I would even guess that most of it is stuff that you know something about. What I also know, though, is that probably there is a need to begin to put some steps into action. So as we go through the presentation, which I think will take about 30 or 40 minutes, I'm going to move pretty quickly. I would hope that you'd be taking notes. I know you'll have a link to this set of slides, and there will actually be a page at the end which will provide you with contact information for you to reach out to me personally. As Heather suggested earlier, during the question and answer period, the intimacy of your own family specific issues and details need to be kind of held confidential. And so if I divert a question to a more intimate interaction with me later today or next week or next year, it's only to make sure that we protect those that need us to protect. All right. So I'm going to move through here pretty quickly. And as I said, most of what you will hear today will not be anything new. The compliance part of this presentation says that I must let you know that that this is a presentation that I'm giving from the perspective of a financial advisor, and that I am not a tax consultant, I am not an attorney. It's funny, when I talk about some of the taxation issues, taxation of trust, how are monies and assets handled from a tax perspective, and then even begin to talk generically about the legal components of putting together a financial plan that is germane to a special needs interest. I tell people all the time now, I take off my advisor hat and I put on my friend hat, because I cannot give specific tax and legal advice. So I say that tongue in cheek. I'll share a lot of stuff with you today on a tax and legal level, but we need to make sure that we are referencing someone who is much more qualified to talk about that than I am. What's important to you as a caregiver? The premise of today's seminar is that you are here because you have somebody in your life that you care a great deal for. And I would guess that this somebody is someone who probably cannot advocate for themselves to the degree that they might need to as they move through life. And so the premise of today's presentation is that what's important to you as a caregiver is that you have a dependent with special needs. And so I'm going to make it just as simple as that. I won't talk about your ward. I won't talk about someone else, because I know that I've worked with moms and dads and grandparents and aunts and uncles, even siblings, whose primary importance was to provide for the care of a special needs individual. But here's the biggest question of the day. And before I even ask you, and I guess you already know what it is, the bulk of the special needs family time is spent dealing with the tactical day-to-day components of life. I asked a lady one time what was the biggest concern in her day in light of the fact we were about to talk about the tomorrows. And she looked at me and she said, Jeff, today my biggest challenge and hope was that my son will get off the school bus without taking his clothes off before he gets to the front door. And she was dead serious. And it was just a testimonial sharing of what was actually pressing on her at that very moment. Now, I'm being a little bit light because I know the scope of what it is that a special needs family has to deal with is numerous. But what I need you to do is to begin shifting, at least for the next hour, from the thought process of how do we deal with the tactical measures the day-to-day issues. How do I take care of this afternoon? What doctor's appointment do we have and are looking for? And for an hour, begin to ask the question, what happens if you're not around? I was in a seminar about a year ago and I shared this general slide, and I just said, is this something that you think about? Which, by the way, I don't get the benefit of this kind of feedback in this format. So, but I ask you to close your eyes and answer the question, what happens when you're not around? I asked the group that one time, I said, do you think about that? And this guy who was standing or sitting right beside where I was standing, he looked up at me and he said, Jeff, he goes, I think about it all the time. And I said, well, I kind of knew that was going to be your comment. And he said, no, you don't understand. He said, I wake up at 2 a.m. in the morning and I wonder, what have I not done? What is it that I don't know that I need to be on top of today? And so that kind of testimonial sharing tells me that even in the midst of the fight, of the day-to-day struggle, the tactical issues that need to be addressed, there is not one of you that is not and has not addressed the issue in your life, at least mentally anyway. What does happen when I'm gone? Well, today's presentation is all about those next steps that you might want to begin to consider. Step one, plan for the future. Plan for the future needs of your dependent. Have thoughts and discussions about medical treatment, education, skill development, employment, housing, transportation, travel, social, and recreational. This particular slide is not very meaty at all. In fact, I give a different presentation called, and Heather, I noticed the entry to this link was life care planning. I actually have a presentation called life care planning that is significantly more meaty than this particular one. But planning for the future is a slide that says planning for the future, ... when I'm not around. Because you will talk about medical treatments for today. You will talk about and address what kind of medical concerns do we have, medications, physicians, etc. What education issues do we have coming up, if we even have an educational opportunity. And so planning for the future, this slide is as much about beginning to shift your mindset from, again, dealing with the day-to-day tactical issues, and begin just shifting through to the process of saying, does my child have a chance to work? I have a client in Austin who has a child who has vision concerns, and very young vision, and very, very functional, quite frankly. But her concern is what do we do today to begin preparing for tomorrow, knowing that their child will be fairly self-sufficient at some point, as we all know. But she was still concerned about what happens when Dad and I are no longer in the picture. Well, the mystery is how do we address the issue if it happens today? Because if it happens in a year, 5 years, 10 years, 20 years down the road, well, it's a little different answer, right? So when I have my clients answer the question, are you planning for the future when you're not around? What we have to do for the sake of limiting the infinite number of scenarios that one can put yourself through is literally phrase it like, what happens if I'm not around on Thursday? It's Wednesday today. What if I don't come home tomorrow? What does that look like? And so the process of planning for the future is about shifting your mindset from taking care of today's elemental and elementary level issues, as complex as they may ultimately become, but begin to replace them with how does this get done if I'm not here? So also add to that, though, the whole notion, how does everything that I've worked to put into place for my loved one carry on if I'm not in the picture? I have hundreds of testimonial stories that I'll intermix in our presentation today, and hopefully it'll kind of ring home the point. Okay, so again, plan for the future, not a real earth-shattering slide, but still fairly important for you to begin to consider. Number two, review beneficiaries. The first time I gave this presentation, it occurred to me that this was an odd slide to have, and it was odd to have it so early in the presentation. Reviewing beneficiaries, though, says that we review beneficiary designations and transference process with family and close friends. Beneficiary arrangements, transfers on death, generally associated with investment accounts. Is my child or is my ward going to be the beneficiary of something? And I hope all of you are saying and finishing my sentence, because we don't want to disqualify him or her from the public assistance that they are either currently receiving or we hope to receive in the future. I sat with a grandmother one time with her daughter. Daughter's the mother of two boys that have special needs. One was like in 9th grade, the other one is 6th grade. Grandmother came to the meeting with her daughter, and the grandmother, through the course of our conversation, shared that it is important, or she felt really wonderful about the fact that the IRAs, the individual retirement accounts that she had amassed through the course of her life, all had her grandsons as the primary beneficiary. Well, out of the goodness of her heart, she felt as though she was doing something that at her passing, she was going to be able to leave some assets to the children because of their need for financial support. And I explained to her that because the boys were currently receiving public assistance, and guys, it's so much more complicated than that, and I'm oversimplifying it, but if your child is receiving or hope to receive public assistance, we don't want anything to land in their lap that would have them exceed a threshold, and that threshold is about a $2,000 value, because the government says we will help you if you can't help yourself. And that helping yourself from a government's perspective is measured at right at $2,000. So this grandmother was about to leave at her passing probably $60,000 or $70,000 of IRA money to her grandchildren, who were going to, number one, have trouble receiving it because of their ages. But number two, if they had ever received it, indirectly or whatnot, it would have temporarily suspended their benefits from public assistance, which Mama did not want to have happen. So step 2 says review your beneficiaries. Generally, we see beneficiaries in insurance contracts like life insurance. We see beneficiary provisions in retirement accounts, an IRA, a 401k. We have a beneficiary provision called a transfer on death in investment accounts. I met with a gentleman yesterday, an elderly gentleman, and he opened up an investment account. He is a widower, but he named his daughter as a recipient of the assets that would be transferred to her at his death. So it works in the same way that a beneficiary does. Bottom line is, blah, blah, blah. We don't want our children who have special needs and are receiving benefits from the government to be disqualified because out of the genuine goodness of our hearts, we have inadvertently left them with assets that would disqualify them. Okay? I wish I could see all of your faces and I would know how this is going across, but I assume it's all good and you're all just leaning forward anxiously for more. Number 3, family meetings. Again, this is like the most obvious thing in the world, but I am constantly amazed at the number of families that I work with who have not done a very good job of amassing all the interested parties to discuss the caregiving of their children, both typical and atypical. And pardon me for the vernacular, but when families don't come together in a organized effort to do the planning and be a part of the planning for the ongoing care of a special needs child, then what generally happens is that mom and dad sit around and they look at each other and they think, well, I think Jim will take our son. I think Beverly will be available. And the reality of it is you do not want to leave something as important as who's going to step up and help ensure the goals and desires of our children's lives continue on in the event that we're no longer in the picture. I was in a presentation at Any Baby Can about 12 years ago. And I had a lady, during this discussion, she raised her hand and she said, I just think I generally ask, how many of you have somebody that will automatically step up in the event that you're no longer here on Thursday? And a lady raised her hand and she said, well, my brother, he will step up and he understands Ronnie's needs and condition and would be pretty instrumental in taking care of his needs going forward. And I said, does your brother know this? And you could have heard a pin drop, and this lady didn't speak for probably what seemed like 30 minutes, but it was probably no more than 10 seconds. And she said, well, I think he knows. And so what happened is what she had conveniently compartmentalized in her mind, that people will step up to take care of her children, was not perhaps as clearly defined as probably it needed to be. So I encouraged her to put together some kind of effort to have a family meeting, and for the purpose, frankly, to discuss the concerns and future care options, okay? So this is, again, a really basic element in putting together a life care plan, but still very, very important. A few years, actually probably about a year ago, I sat in a meeting that the ARC put in place about intentional, I have it written down here, putting together a team. And the team is outside of the family. So the family is kind of this, the first layer of support, and it should include everyone involved, okay? But outside of the team, it's important that you begin to put together, outside of the family circle, it's important that you begin to put together and create a team. An example is listed here on this slide: a financial professional, special care planner, or a chartered special needs consultant. And that's the role that I have played. But you also need a special needs attorney. You also need an accountant and CPA. Probably not quite as critical if that's a hard piece of your team that you're trying to build that you haven't yet been able to accomplish. But still very, very important. I can tell you that my role as the special needs consultant would include some of those assets, i.e. the special needs attorney and a CPA. Obviously a health professional, guidance counselor, or social worker, and religious and spiritual influence and counsel for you. Again, these are observable experiences that I have had with families who are in the throes of trying to figure out who's going to step up. So if it's beyond your brother, if it's beyond your neighbor, and it begins to require the need for expertise, that's where a legal, a financial planning team needs to be put in place at some point. I would also add to this list somebody that you can find that has an intimate knowledge of the inner workings of the Social Security Administration system. It makes me nauseous every time I go to hhs.texas.gov or Social Security Administration, and it gives me a phone number or an address. And I just have this vision of standing in line or sitting in this room with people, now conveniently spaced apart, to ask somebody behind the counter some specific and intimate questions about our situation. And so although that is absolutely the venue and the portal that you would want to take advantage of, by creating a team of specialists, of which the ARC has some remarkably talented people, as you put together your team, to include somebody who has an intimate knowledge of Social Security Administration's inner workings, that would be ideal. They are also like the coveted unicorn. There's not many of them around. And if you find one, good for you, because they are absolutely an ace in your pocket here. So number 5, get additional resource and support. All the local nonprofits, the ARC of San Antonio, Any Baby Can, Brighton, Down Syndrome Association of South Texas. Find the resources that will give you, number 1, a listening ear, but then be able to give you some very, very tangible counsel on how to address certain issues. A little testimony, a few weeks ago, I had a lady who, out of the goodness of her heart, had identified this family who had needs, and she was referred to me. She came into my office. There was really nothing that I could do because of the dynamic of the situation, and I asked Heather at the ARC if she would be willing to visit, and she did. And I don't know the outcome of that meeting, because generally people take their own path from that point on, but the comfort in this lady's eyes that there was somebody that she could go to, when if she ever did, to seek counsel and direction, that's where the additional resources come into play. All right, so you have your kind of your for-profit. I'm going to go back here. Creating a team. Look at all of those people outside of the religious and spiritual advisor. Most of those people on that team are in a for-profit perspective, right? You go to an attorney, you ask them to draw up a will or special needs trust. Well, all of a sudden, you're going to have to pay some money to have them do that. You come to me, and we have that trust in place, and now we're trying to figure out how do we fund the trust. Then we're talking about life insurance, or we're talking about investments. But all of those things cost money. So you have your inner circle of your family and friends, your next circle of professional advisors who are generally for-profit, and then you have your local nonprofits and support groups, which are obviously not-for-profit. The point is that you need a team of people surrounding you to help you begin to address the issues of what happens tomorrow. Government benefits. This slide, we've got entitlement benefits, public assistance. You know, we're talking about SSDI. We talk about, you know, the difference between having earned your benefits by way of work credits versus a non-means tested version of benefits that come into play here. But we're talking about government benefits, and it's just the difference between those that we have an entitlement to and those that are called just generally public assistance. And public assistance is generally included in that. The flagship element of public assistance is Medicaid, and Medicaid is a function of the disability and the age Medicare generally has its link to, do you have any work credits, which will help to merit the income stream coming in. Medicare benefits tend to be a little richer. Medicaid benefits tend to be a lot less significant in terms of dollar values. But what we do as a planning team is to begin to help you coordinate all of those benefits, whether they're coming from a means-tested perspective or a non-means tested perspective, to get your child the benefits and the programs that are available to them. A year ago, I met with a lady who came in, and she has a 17-year-old son, and she said, Jeff, she said, we really have a moral dilemma about accepting public assistance and even some of the entitlement benefits that come as a result of Medicare. She said, we really feel like we have the ways and means to help financially support our child for the rest of their life. We don't know how much it's going to take, but we really don't feel like because we are gainfully employed, we don't want to put pressure on the system. And I said, well, that's a totally noble perspective to have. However, you are paying into a system right now that you should receive the ultimate benefit from. And so you have already kind of paid for the future benefit should you choose to accept it. So there would be no reason to doubt or feel any guilt regarding that. It is yours to have. And I said, and I don't know if you can see this on the video because I can't see myself, the nut to crack without government assistance is this big, okay? And here's the general math. I have a 17-year-old son who has a life expectancy to 57, right? So 17 to 57 is at 40 years, right? 40 years of supplemental financial support as shouldered by mom and dad. The nut to crack that is this big. In other words, you better have a lot of savings, you better have a lot of investments, you better have a lot of insurance, because without any help, this is the nut that you have to crack. And it made sense to her. She goes, I get that. And I said, if you are able to accept the notion that there is public assistance, both entitled benefits and public assistance, that you're willing to take, then the nut goes from this big to this big. And if you're prepared to do that, then what you've got is you have so much less pressure on you to financially prepare and provide for your child going forward. So think about it. She comes in and she says, we really don't want to put any pressure on the system because we want to take the responsibility for our own child. And I said, this big, this is what you need to come up with. And I said, but you include public assistance, you include the entitlement benefits, you go from here to here. And I said, we can do that. We can't do this, right? So the point is that we have to do some coordination, and the specifics around each Medicare and Medicaid, it's much too in-depth to cover, it's much too complex to cover in depth in this format, but it's something that you've got to make sure that you begin to do. Step number 7, legal structure and considerations. Letter of intent. The letter of intent is a document that is totally valuable for the benefit of giving somebody a notebook, hope you can see that, and saying, here is the life of Bailey. My brother, who is the caregiver for my children, if I die unexpectedly, or we know it's coming, on Friday, he's got to take possession of my child. If my child has special needs, think about the myriad of issues that my brother would want to know the answer to from doctor's appointments, doctor's names, snacks, toothpaste, anything, right? The list is numerous with regards to what it is that you've got to be prepared to deal with now that you have custody and possession of my child. Because as a parent, I don't want too many things going unaddressed. And so the bottom line is that you begin to create a document, which we call a letter of instruction, a letter of intent. I've seen people do it in a video format. I've seen them do it in a notebook. I would actually recommend that you would consider keeping a notebook and a notepad, because this is a living, breathing document. It never changes. It never stays the same. It's changing constantly. So it's important that your letter of intent have some very clear explanations on what it is that your child needs. I use this as an example sometimes with non-special needs cases, and I say, Mrs., if your husband passed away today, would you know how to access the savings account that's in his name? And she said, well, no, as a matter of fact, I don't know. I said, could you open up his phone? Would you be able to access all the accounts that you guys have? Would you be able to speak for him as in a medical directive? Would you have powers of attorney, et cetera, et cetera? And the overwhelming answer is no, I don't. And that's what I'm saying here is you need to begin thinking ahead and saying, what is it that someone would need to know to take care of my child? Well, it's obviously outlined clearly in a letter of intent, but there's all kinds of formats for that to take place. The next idea is we talk about guardianship and alternatives. Guardianship is its own presentation. Guardianship tends to be one of the most emotional topics that families have to deal with. Suffice it to say that the court, when your child, regardless of their capacity to advocate and defend and live for themselves, when your child turns age 18, at least in the state of Texas, right, the court says they have adult or legal authority over their own life. And so if you care to remain caregiver and have access to medical records and speak on behalf of your child, guardianship is the topic that you're going to want to talk about, and obviously talk about with an attorney. And it isn't an all or none deal. I talked to an attorney just the other day, and she said, families need to realize that once you take possession, once that child turns age 18, and you have had them forfeit their right as an adult, right? The court doesn't do that very easily, and so it's really important that you think through that, and it's a long process to address. We talk through wills. Obviously, in the state of Texas, we're a community property. What is mine is yours. What is yours is mine. But when we talk about wills, we also begin to talk through trust. Let me move through here. Advanced medical directives. I can tell you guys, if you have your phone, take a picture of this slide. You'll get it in a link, but this is a great list of things that you need to be considering on the legal side. Estate planning, trust, titling, we've kind of talked about that, special needs trust. Let's talk about a special needs trust real quick, okay? Step number 8, special needs trust. Earlier I mentioned that for our child to receive public assistance or entitled benefits, we can't have their net worth exceed $2,000. So you don't want to have a savings account in your child's name that has $5,000 in it, because like I said before, the government says if you can take care of yourself, we're out of the game. And again, I'm way oversimplifying it, but that's essentially how it plays out. And being able to take care of yourself from a government's perspective says you have assets that exceed $2,000. Well, here's what you do. You're right. So you spend down their estate, and when you get below $2,000, and again, oversimplifying this, the government says, okay, we will restart your benefits, whether it's SSI or SSDI Medicaid benefits, et cetera, et cetera. We will temporarily suspend that until you drop below that threshold of $2,000. So families go, but there are things that I want my child to have that are not being met by Medicaid, Medicare. SSI is so small, it doesn't pay for anything. Well, you can establish and create a special needs trust in the will preparation. So you can have a standalone special needs trust, and that trust is generally funded at the death of the person who established the trust for the beneficiary, namely the child. There's three different kinds of trust here. Special needs trust, you have a third-party trust, special needs trust. Third party simply means that the trust, by the way, we throw around the words trust and wills and the lingo, and the idea being that we just all know what that is. A trust is literally just a document that says, I give somebody, the trustee, the benefit of the doubt, and they can manage the assets for a beneficiary in line with me. So when I had children that were under the age of 18, I had a trust, not a special needs trust, but I had a trust so that assets would go to them. My brother was the trustee, and he could distribute assets out of the trust for the benefit of my underage children. Well, in a special needs trust, the wording is such that assets can be distributed for the benefit of the special needs child, and it does so in such a way that it does not disqualify them from the special needs or from the public assistance that they're getting. Lots and lots of things can be paid for with assets out of a special needs trust. Money is never paid to the beneficiary, the child, the special needs child, because if it falls in the special needs child's name, then we conceivably disqualify them from special needs benefits, and we don't want to do that. First party trust, and by the way, third party is funded with assets that come from outside the beneficiary's name, and generally that's life insurance. That's what I help my clients do more than anything, is get them to have a special needs trust created, and then I help them by way of insurance or investment products to fund the third-party special needs trust. So a trust is just a document. It's an account at the bank. It's an account with an investment company, and it is funded generally at the death of the third party, namely the parents. And you would do a standalone so that you could have multiple contributors to the trust, like grandparents and whomever. First party trust would be funded with the beneficiary's assets. We generally see first party special needs trust established for those individuals that are part of an accidental claim. So when somebody is rear-ended or hit by an oil-filled truck, and we need to establish a trust for the proceeds of this disabled person, it is funded with their own money, their own reward, and that's why it's called a first party trust. A pooled special needs trust, the Arc of Texas has a pooled special needs trust. It's also called a, can't think of it right now, but that's not unusual. The pooled trust serves a lot of really cool benefits in that you don't have to find a trustee, because the pooled trust has a trustee, and your child's assets has an account, my child's assets have an account, and so on and so forth. So whether it's a third party or a first party funded trust, it can all fall underneath the umbrella of a pooled special needs trust. And I recommend that a lot of times. So I'm going to defer that to the Arc of San Antonio. If you have conversations or questions about that, that would be something that you might want to follow up with. Carrying on here, how does it protect my dependents' government benefits eligibility? What can it provide, and are there restrictions? lots of answers that I think we've kind of generally answered here. Again, guardianship, conservatorship, for the sake of this presentation, they're essentially the same meaning. Medical, residential, educational, social, and financial decisions. Within the guardianship, we're identifying people that have medical power of attorney, that are answering the medical requests from the physicians and able to help make medical decisions. Durable power of attorney to address the financial decisions. Is my dependent under 18? Is my dependent over 18? Again, a very, very complex decision, but it's certainly something that you need to make sure that you're thinking through. So yeah, I have identified a care provider, the letter of intent. I want to talk about that again. It's totally, totally important that you begin to create that. And it can be as simple as as you want it to be, but the bottom line is somebody needs to know. Here's a great story. I had a client of mine who has a child who special needs, elementary, and the client was in a meeting and she wasn't able to pick her son up, or not pick him up, but meet him as the bus was dropping off the children. So she asked her brother. Well, the kids at school had gone on a field trip and school was only half day, and so the bus was coming earlier, and the brother who came to meet the child getting off the bus presumed that they had eaten lunch at school, so he did not provide the snack that was ordinarily offered when the child walked into the house. And so there was a meltdown of exponential degree because the brother didn't know that when we got off the school bus, there was a snack waiting, and he didn't think there was a snack needed because it was 12:30 instead of 3:30, and there was just colossal collapse. And I thought, that's important to know, because it's important to me as a parent that my child have what they want. Sometimes it's important that my child has what they need. And in this case, it was kind of a need situation. And so the letter of intent is just another mechanism by which we're letting those people who are stepping up to take care of our children know how to deal with today. How do you start the process? There's a couple of different kinds of estate planners. There's legal estate planners, and there's financial planning estate planners. But you need to get together with somebody who has a perspective of the overall process. I can help you do that. In summary, find a professional that will help you. Let me tell you real quickly how I work. I don't charge a fee for people that come into my office. I've had one client in 26 years tell me that if you aren't charging a fee, then it must not be worth that much. Kind of hurt my feelings. But I know that the financial strain of raising and managing life with special needs or not special needs is monumental. Also, I know that if there's a fee involved in seeing me every year, then there's a likelihood that you're going to stop wanting to see me. Well, we got a 13-year-old that isn't managing life real well right now. And life will continue to change. And if it's money that keeps you from meeting with an advisor, then I chose to get rid of that fee. I get paid on the investment products and the insurance products that you choose to put into place to fund the special needs trust. So find a quality professional to assist you. Remember that you are the expert about your dependent. Think lifetime care and quality of care. Thank you so much. I hope this has been good. We went a little longer, but we still have a little bit of time if we've got some questions.
Thank you, Jeff. Great information. A couple of things I just wanted to kind of add on to what you were saying. You had talked a little bit about the network, and that I think that's the term you were looking for. It's the network that, right. Yeah, and it's through Texas Parent to Parent has some amazing resources on their website that can help you kind of navigate how you could set up a network or what that might look like, in addition to having professionals, pulling in family members or neighbors. a really great resource. So we'll make sure to put that on the follow-up email that we send out. We'll include that website. And then there's also the ARC of the US has a really great resource. It's the Center for Future Planning. And it's a portal where you can pretty much put all of your information. And so it's a really good way to track and make sure you're addressing all these different areas. So we'll include that as well in the follow-up email. So we do have a couple of questions. The first question is, can you explain the difference between transfer of death and paid on death in terms of the beneficiaries?
The transfer on death and what?
And the paid on death, POD?
Transfer on death is a standard version of a beneficiary provision, right? Because we're talking about non-qualified assets, in other words, assets that have already been taxed. So the transfer on death is just a way for the recipient to make or to not generate any taxable concerns upon the receipt of that particular asset. The paid on death, I'll have to do some research. I don't know the specifics of that. I've never used it. I've never used a paid on death unless it's just simply, again, a more specific version of the transfer on death. But I don't know.
Okay, and like, hey, well, so you can check into that, and then we can send out in our follow-up. We can send out whatever you find out. Someone's asking if you can go back to go back to slide 9, maybe. Yeah. Oh, step 9. Okay. So second question. So $2,000 is that resource limit. Have you heard or seen any kind of indication that threshold might change? It's been $2,000 for so long. Any indication that may change?
That's a great question, because numbers historically, right? We know that, for instance, IRA contributions have risen for years, right? I remember funding an IRA at $2,000 or $2,500 a year. Now it's $6,500 a year. My guess is that it will increase, but as far as I know, there's nothing on the docket to address that number. So as far as I know, we're still at 2,000, and I don't see any, and have not heard any potential congressional move to increase that number.
Okay, great. Do you have a place where an individual could get an example of a letter of intent?
I'll tell you what I'll do is I will send you, Heather, some documentation on that. I actually used to have, and there used to be, Mass Mutual produced a disc that had kind of this laundry list of questions that would kind of spur the thought process on what it is that a family might want to know. But yeah, I don't have one off the top of my head, but I know they exist. So I'll look into that and pass that on to you as well.
Okay, that sounds great. It looks like that was all of our questions. So we'll go ahead and wrap up. And I want to thank Jeff for his time this morning. We also, just at the ARC, want to encourage anyone that has an individual with disabilities in their household to make sure to register with the census. It's really important. The last day to register is September 30th. And your contribution to doing that can last for 10 years in terms of funding for public transportation, roads, healthcare, and education programs, and it just takes a few minutes. So we just encourage you to do that. You can go to the website at my2020census.gov to do that. So So again, just to wrap up, you will receive a follow-up email from us with information on Jeff's PowerPoint, the link to the webinar. You'll also be given a survey just to help us with future presentations. If you visit our website, you'll see also that we have all of our past presentations on the website for you to view. So again, I want to thank the Mays Family Foundation for making this webinar possible. And you can watch our Facebook page for future webinars that we have. So thank you for joining us today. We hope you come to our next webinar. Take care and stay safe. Bye, everybody.